We could do the horse race of the numbers, but I think for me, what really sticks out is no longer issuing forward guidance. The press release to me isn't clear on the why. Why aren't we getting forward guidance?
So thanks for having me. So I think for Spotify, the story has been in the last few quarters is for them a focus on advertising. And if you look just the last few years, advertising used to be less than 10% of sales. And this quarter, I think it used to be, this quarter is actually 15% of sales, which is the highest it's ever been. So maybe that's why they want investors to shift focus from user growth, because as you noticed, the user growth is moderating. So really just to shift the narrative to the advertising part of the business.
And you can shift the narrative by giving less information. I mean, they say they're talk to us about the realignment, they say, of our current guidance, because they're basically going to be intend to utilize quarterly guidance as checkpoints against our progress. And going forward, we'll simplify our approach, providing a single estimate. So will we get more information or less, do you think, overall?
I hope we get more information, especially in the advertising part of the business. When we look at podcasts and viewership and things of that sort, we don't really have a clear indication to what's going on there. They give us, some numbers there about, usage doubling versus last year, but it's hard to look more closely to that. But to answer your question, yes, more disclosure is always best, and this doesn't look good. But what it says is active user growth is probably going to continue to moderate, and they don't want to have to update their annual guidance every time.
I'm curious that when we talk about companies like this, that obviously they have a subscription model, but they also have an ad-driven model. And there seems to be so much competition in this space with regards to the advertising side of the business. And I wonder if we've gotten to a point where maybe it's just a little bit too much for consumers, and whether there becomes a breaking point where some of this just sort of fractures off and you can't build a business, or at least not the massive business that we've come to know out of, say, an Alphabet or of Meta platforms.
Yeah, absolutely. It's a very good question. So for other platforms, that is definitely the case. But when you look at audio, advertising is still very nascent, and especially digital advertising, because advertising over 80% to 90% is still on radio and traditional platforms. But digital advertising is growing. And podcast wasn't even a business 5 years ago for Spotify, and now it has grown exponentially. So I think to that point, they see a lot of growth there. And I think last time they gave some guidance there, they see advertising being over 20% of their business, and the other 80% will be premium subscribers. So they're really betting on this advertising and growth.
There is a bigger theme that we're getting from Meta, formerly known as Facebook, where they're saying that they're hearing from their advertisers that rising costs are pressuring ad budgets. Could you read through the same to Spotify?
It's not an issue so far, just because the CPMs or the advertising costs for audio are still very fragmented, to Romaine's point. So we still haven't even reached a consensus on the cost there. So for now, advertisers, if they want to target audio audiences, especially on podcasts, they're likely going to platforms like Spotify. The cost is not an issue right now. It's more about reaching the audience.